So Mike led the founding team of SevOne as president and CEO, and he shaped the company's go-to-market strategy and vision, securing the funding and building an experienced world-class team that enabled SevOne to become one of the fastest-growing, profitable, disruptive technology companies in the infrastructure management market. Under Mike's leadership, SevOne won numerous awards and grew into a customer-focused company that's changing the way service providers and global enterprises think about infrastructure performance management. So prior to SevOne, Mike founded StorNet in 1990 and built the company as CEO into a leading national consulting and storage networking integration firm. And StorNet enjoyed 11 consecutive years of growth and profitability and achieved over $80 million in revenue. Then Mike was named one of the top 20 visionaries in the storage networking market by CMS VAR Business magazine.
Yes.
Does that still exist?
It probably doesn't.
No. So anyway, Mike Phelan from Osage Venture Partners.
Thank you very much, Brad. Can you hear me all right? Is this working? Let's see. Turn this on. Let me see if it's working. It's working. It is working? Okay, good. Well, thank you. I'm happy to tell you a little bit about how I got here and what SevOne was about. And as Brad just mentioned, I've started a few companies. My wife keeps track of the ones that didn't work, so I won't talk about those. But a couple of them really did work well. And I've enjoyed being an entrepreneur in technology, building technology companies in this area. And so I've heard people say there's other parts of the world that are much easier. This was a great place to do it, and still is. So, the things that I look for when I think about a company. Right now, by the way, I'm going to talk a little bit about Osage Ventures also. I'm a partner with Osage Ventures now as an investor. They were the only institutional investor we had at SevOne, so I learned a lot from them, and they were nice enough to make a home for me. So I'm going to spend 5 minutes at the end here talking about Osage as well. But whether it was Osage or whether as an entrepreneur, I always looked for the same type of things. First of all, is there a big market? Is there a market that I can look at and people are buying the product and they're going to be buying more in the future? So that's the way I look at a big market. Does it have a great product? Is there something there? And these are the basics you've heard over and over again. Is there a good product that one, I can understand and I can see that it's capturing that, can capture the market and will continue to in the future? And then can you build a great team of people that you want to hang out with and build the dream together with? And that's, a little bit about my history you heard with StorNet. Let me back up there and say how that started. I spent 10 years after I got out of school working as a sales rep for technology companies. I worked for some, like 4 different companies in 10 years. And I had to go find a new job because technology, whatever I was selling, something else came and stomped on it quickly. And what I also learned during that time, and I worked for some really cool companies. One was in the mid-'80s, before artificial intelligence was even known, the AI lab at MIT got money from the Army DARPA money to make a company called Symbolics. So I opened up the Philadelphia office, and I grew it to $13 million and closed it. So I learned about hiring and firing. And I learned about selling cool technology products. But one thing I learned during that time was I always had to put a team together to sell things. So my piece of it, if I was selling some piece of software, was only part of the solution. I had to get like 4 other reps together and say, let's do a proposal together because AT&T wants to build this library image network or something. And getting all those folks together was hard to do. And so as I realized when I tried to find a job 4 different times, I'm going to start my own company that just is an integrator, putting those teams together to bid on the projects that I knew of. So I started StorNet with that premise. And so there were a couple of deals I knew I could win, or thought I could win. We won one of them, and it kept on growing. But one of the things in any business, the first thing I ask people about is, are you focused on the sales? Are you waking up each morning figuring out how are you going to sell this product, or how am I going to get people into the company to sell it? And then what are your other leverage points once it starts growing? What else do you need to get? In this business, StorNet, there were 2 kinds of characters. I called them CSGs and RMs, Certified Smart Guys and Rainmakers. And Certified Smart Guys were the engineers. And most of them back then were all guys, so I could call them certified smart guys. And I knew where they worked. We had a profile, and it was where do they work, where do they, what are their interests, and how do we find them and recruit them. So that was what the business was. For Rainmakers, they were the sales guys. Where did they work? Where do we find them? So I spent 11 years of my life recruiting Rainmakers, CSGs, certified smart guys, and Rainmakers, and built the business because I understood that was the leverage point for that business. So I sold that business I guess it was 2000, and I spent a couple years, 2002, as the market kind of crashed, and I learned a lot of lessons. And one lesson I learned was about venture. And I was very proud of the fact I hadn't brought in any outside investors. I had bootstrapped that business and built it myself, but I knew nothing about selling a business, but didn't know nothing about selling a business. So when I sold my business, it wasn't the outcome it should have been. A lot of things, there were a lot of ways that had blown up that it shouldn't have, and I didn't know any better. So I had decided, when I go into business again and do something, I'm going to surround myself with top-notch people, not just my Rainmakers and CSGs. I'm going to make sure I have a top-notch CFO. I'm going to make sure that I have investors that know what they're doing, that I like, and I invite home to dinner, and want to be, enjoy the ride with. So when I joined SevOne, let me say how I found that opportunity too. I did it. People ask me how do you find opportunities like that? I didn't know at first. When I finished and sold my first company, all I was doing was driving my wife nuts for about 3 or 4 years. Because I was looking at deals and I wasn't very methodical about what I was doing. I met with a friend in Philadelphia here who was an adjunct professor at Wharton Group and was teaching a class. And he asked me what I wanted to do, and I talked about all this, really shotgun, I want to do this or that. And he said, Mike, I'm giving you an assignment. He wrote clear thinking equals clear writing. And he said, I want you to tell me the next time we meet what you want to do, who you want to do it with, what you bring to the table, what you want to get out of it, and when you're going to leave it. And he goes, you have to do that in 5 bullets or less. And I said, okay. So what I did is I wrote up that I want to work with people that I admire and respect, that I want to hang out with, that recognize they need me, so I don't have to sell them on why I can help them build their business. And I want them to live in this area. I had kids in the Boston area going to school, so I said I'd move up there. I wanted them to also have a product that I understood. So my last business was storage and network integration. So if it was in storage or network integration, computer IT, that I could add value. So that was the product. And then I wanted them to already have sold a product somewhere. I didn't want to start from scratch because I was 49 years old, and I said I don't want to start at this point. I know how hard it is to start from scratch. So I sent those bullets out to about 50 friends, and I got some really cool stuff to look at. And one were these 2 Bulgarian geniuses down at the University of Delaware, a husband and wife, and I joined them behind a comic book store in a garage off of Main Street at the University of Delaware in 2006, and I worked for them for free. And I said, here's the deal. I'll be your partner, and I'll help you grow this together. They had made 1 sale. And so they had made 1 sale. They had, a couple others. They knew how hard it was to do that. So they were probably looking at me to help them sell. I'm not sure. But what I did was focus on, first, they already had a product. They had built a product. Let me explain that then. Vess was working at Bank One, later became J.P. Morgan, during the day. At night, he was an adjunct professor teaching at a graduate level at the University of Delaware, teaching how, remember Napster? And how the architecture that let you share music, Vess understood. And he was teaching how those distributed architectures work at a graduate level. So, and at his day job at J.P. Morgan, he was helping manage the infrastructure for the credit card division for IT, and he realized they were inheriting all these tools as they bought different companies, and he would get these different tools for managing them. He realized they weren't fast enough or scalable enough as what he was teaching at night. So he decided to apply those principles of these distributed architectures that would build things like Napster to management of IT infrastructure. And he built something really special and unique. So it fit my criteria, and I really liked the couple, and we joined, and we had a lot of fun together. So in 2007, I was there for less than, say, 9 months. I decided we got to raise some money now. So I brought in under what I told you before, I wanted to bring in experts. I brought in a guy to be our finance guy who had already done 2 IPOs. He had managed diverse companies, software companies, music companies, and he was retired young. He was younger than I am now. I think he was like 55 years old, and I said, just work for me 1 day a week. And then it became 2 days a week, and then 3 days a week, and it became 7 days a week. But Bruce was there real early. So to have somebody who was, one, fun to hang out with, who really knew his stuff, he helped us also raise money. And we went around and we looked at the different venture firms. So as I mentioned before, I hadn't done that. I have a friend who has whose family has a farm in Pakistan, and he gave me a proverb once that I loved. He said, every snake is poisonous until you learn about the snakes. And so I thought all venture firms were snakes and poisonous snakes. So I think there might still be snakes. I'm working at one now, but there's helpful snakes. I mean, there's helpful companies that know that if you know it's a garden snake, it's not going to bite you. If you've learned about it, the fear goes away. And the helpful side, so in 2006, I went and I met all the different venture firms. And the neat thing, part about how do you raise money with a company? And I thought that would be one takeaway here. You can't raise money unless you're already making money. So you have to figure out a way to bootstrap and get things started. So we were at about $700,000 in sales already. So that's the hard part. I mean, there is seed capital in this area. I'm not familiar with that. I know it's very hard to get. If you have a brilliant idea and you're brilliant and you have people, there are people here, places like Round One that will fund, business plans. I never had any experience in that. I still don't have any experience in that. And so the easiest way to raise money, in my perspective, is you have to already not need it. So what I wanted to get to with SevOne was we were selling, and we had a product, and we were making sales. So when we went out to raise money, we wanted to do it to grow the business, not to sustain the business. And that made it a lot easier. So anyway, what happened with SevOne was I brought in, the one thing I mentioned before, you have to focus on sales. We had no money. So before I could get Osage's money, I went to one of the top sales reps I ever met. I worked right out of school for what was shared medical systems. Now it's Siemens Medical. And I had a job in sales for the most ornery guy you'd ever want to meet. And he was a brilliant sales guy, though. And I knew when he retired, he would go crazy. So he was retired now. He's 65 years old. I called his wife and I said, how's Bob doing? She goes, driving me nuts. So I thought, I have a job for him, but I can't pay him anything, only commission only. So I paid him 25% of the gross amount he sold. He didn't sell anything for 9 months. So he came in every day, but after 9 months, he sold a $500,000 deal. He got 25 or 30% of that. So, the deal I made with him was he gets that 25 or 30% if he sells at list. Guess what? Bob sold everything at list. And so he got us into Comcast. He got us into Johnson & Johnson. He got us into Cablevision. He had like 6 deals in a row that he got us into. And we had these initial deals. So I had that. When I went to Osage Ventures, they could see we had momentum. Now, that's really about how to get started with it. I mean, is to really find a way that you can get somebody to sell who understands what you're selling, who's willing to do it. The end of that story for Bob, I think it's just, I'll end with, Bob passed away 3 years later. The company grew like crazy. We were in the middle of closing a big deal with Thomson Reuters. He didn't show up for the meeting. The first day I met Bob, he interviewed me at his home. He had me come to his home to interview him, and he was in his boxer shorts smoking a cigar. It was the most intimidating thing I'd ever had. Well, apparently he passed away in his boxer shorts smoking a cigar. And so what the part of that story that I wanted to share, though, was working with the right venture firm made all the difference in the world, how we treated him. When you give stock options and you die, they go away. Well, it wasn't fair because he got us into all these deals. So right away, Bob Adelson and the management at Osage said, we got to do something. So we created a structure of phantom stock. So the best part, one of the highlights in my business career was after 2.5 years ago, I stepped down from Osage. And we sold a controlling interest of our shares to Bain Capital. And it was a wealth creation engine. It did really well for everybody in the company, for our investors, and for me personally. But the nicest thing that happened to me, I was able to knock on his widow's door and I felt like Ed McMahon delivering the big check. I was able to deliver a big check for something that they didn't expect. And to me, that was one of the highlights in my career. But it also says a lot about what the kind of venture firm you're working with. So let me shift gears now. I don't know where I'm doing on time right now. Okay, so just if I shift gears and talk about Osage. So I'm working with our investors now. So when I did this deal, I stepped down. I stepped down for 2 reasons. One, I had already used up all my skill set. The company had grown like crazy, and it was time to bring in another CEO. Also, you see I came up in a cane. I have MS, and it has been progressing, and I thought, okay, it was just perfect timing for me to step down and get somebody else in place here. And Osage was terrific in helping us think through how we're going to do this. It didn't start a month before we decided we're going to, look for a transaction with the company. It started 3 years before, where we would think about how do we cultivate these relationships of companies that might be interested in buying us in the future? Who are these strategic partnerships that we can develop? So we spent not just every board meeting do we have a section, but we would have regularly monthly meetings about how are we cultivating these relationships and letting them know what we're doing is exciting and how do we bring in the right PR at the right time so that they know who we are and what we're doing. So it was a very strategic, working with professionals. It was a much different experience in my second big company than in my first, because we were very thoughtful about what are we going to do with this when it gets bigger. And so it really worked out well for all the employees are all still there. They all made a chunk of money from selling a controlling interest of their shares, but they're there still building something huge now. And that's what's exciting. So I decided, and I was offered the opportunity to join Osage Ventures. Osage Ventures is one of the premier early stage technology, I'll call it a technology company, but it can be medical, it can be others, typically in the Philadelphia area. What we invest in is early stage, business to business, and East Coast. So if you think of what early stage means here is it's supposed to have approaching $1 million in sales already. It's kind of what I was looking at before. They're not a seed stage company. They invest in things like what I had. They look for companies that already have figured out how to get their first sales and need it for growth. And 2, it's software, and they're selling to businesses. They're not consumer oriented, and it's on the East Coast. But they're very good at helping companies that are in that category think through how they get bigger. And for me, it's a lot of fun to be part of seeing the other side of the table. To me, I mean, when I make decisions in the past, I'd say, okay, I like that person, I like what they're doing, let me make a few calls to make sure I'm not doing something dumb, and then I go do it. Venture firms ask 1 million questions. They have pages and pages of questions. When you think they're done, they ask 1 million more questions. And they call due diligence. And to me, I still don't, it's interesting to see, and it's powerful, and it's fun to be part of, but I still don't understand that part of it because I'm still trying to make the gut feel decisions. But I also have made a lot of dumb decisions with my wife. And the times I've tried to be an angel investor, let's say I've probably made 10 angel investments in my life. I don't think I have anything to show for that. So I made an agreement with my wife that I won't do that anymore. So the investments I'll make are the investments that professionals like Osage are making. I'll put personal money in that too, but it's great to be around professionals who are really thinking through what the risks are. In my first business sale, I didn't understand the risks who I was selling to. I sold it to a company that blew up because they weren't structured properly. I didn't know to look at it that closely. And that wouldn't have happened if I had done it with with investors on my side. So I've learned some hard lessons, and but what I'd leave everybody with, if you're starting a business, it's first to focus on, assume you have a great market. Assume you have a great product and you're going after it. But then you have to, the two things is, you should be waking up every day figuring, how do I sell this and how do I bring people like that guy Bob Fetters into my life that will help us get off the ground. And then two, the other thing a CEO has to do is cash flow. I used to call it I try to boil things down to a third grade level so I can understand it. I called it my Kaminsky-Kowalski report. I just needed to know what's coming in and what's going out. And I needed to look at that every day. I needed to know that how long before we run out of money. And I knew that. And so it always surprises me when an entrepreneur doesn't know that. You have to know what your cash flow is, what's coming in and what's going out and when. So it's sales and cash flow. And then for team and culture, work with people that you really want to, that you like hanging out with, because it takes a long time to do this. So anyway, I'll open up to questions now.
Great. Thanks very much,
Sure.
Mike. We'll take questions from the audience.
Mike, thanks very much for coming. Appreciate it. Could you share some of the investments that you've looked at Osage and kind of how you've gone through the discerning factors of what's kind of drawn some of those different ventures, please?
Well, I think they invest in people. They have a passionate, exciting entrepreneur, and then the same things I mentioned before. They're going to look at the market. Is this a market that they're excited about? And are they showing some traction? Are they showing that they've already figured out the early stages of how do you get this thing going? So they look at a lot of deals. Osage probably gets at the top of the funnel like 600 things that they look at a year, and they might make a half a dozen investments. So they look at a lot of things, and so it's very hard. It shows you how hard it is. There's a lot of people that have ideas in business that start, but very few that can get that criteria that I'm talking about. And then they look at it and say, is this a person? Same thing I was saying before. Is this a person you want to hang out with that's passionate about what they're doing, is smart, is excited about what they're doing? You want to be part of that. So that is always a big part of it. So, thank you.
Thank you for coming. Just a quick question. You mentioned one of the criteria is the East Coast only. Is that because you've done ones on the West Coast?
It's not in stone, but Osage wants to be able to have face-to-face contact. And I know that kind of sounds old school, but they do want to have face-to-face. And we've done things together with West Coast firms where we've co-invested, but we want to have firms typically that we can drive to and where we can fly to in a short flight and get back that day. So they want to have that face-to-face relationship. I think they can add value to that with that. Come on right here. Sure.
Talk a little bit about how big your fund is, how many deals you guys do a year. You say East Coast, but generally, is there a geographic area?
Well, I'd say it's from Atlanta to Boston is what they define as their East Coast. They used to do Mid-Atlantic, and that just kept on getting wider. So, they've made investments in Atlanta. The fund is just under $70 million fund. It's getting close to it the next fund's is coming around. So, how many investments they make a year? Probably what I said before. Probably half a dozen investments a year, and as I mentioned, very cautious about how they do that. More cautious than I could ever imagine.
So a lot of companies in Philadelphia are bootstrapping.
Yes.
And could you give some advice in terms of the top things they should be thinking about as they're bootstrapping? How to get to that next step, those types of things.
Bootstrapping is something I've done a couple of times. It's something figuring out how you get, how do you get somebody to give you a space that you can work. Now you can do a lot of your work at home, but I would find somebody who is giving us, hey, can I rent for $200? Can I rent the back of your, comic book store here that has a warehouse or whatever? Is what we did at SevOne. I did the same thing in StorNet, my first company, I actually, the landlord showed me all these places to rent, and they had one filled with brooms. He said, "Oh, that's a broom closet." I said, "That'll do." I was able to move in 2 desks, and I think we paid $150 a month for a broom closet. So having a place to work. I think the other things, there's so many tools available now. There's so many tools that are virtual tools that let you, have, you don't have, you can buy apps for everything nowadays. And so bootstrapping, I mean, I think the most important part is get your product, have somebody who is willing to buy your product. And even if you aren't done yet, if you have a product that's not done yet, you have to start cultivating those relationships with the people that are going to buy that product. Say, if I have this, if this is all done, am I solving the problem for you in which you would pay us money? And by the way, would you give us a little now so we can get there? And even if you don't get that, you start building that credibility as you start getting there, and they see you making steps in. Let's just say you're trying to sell something to an enterprise, and they have a problem, and you're solving that problem with your software you're developing. If you can show them, tell them what you're going to do, and start showing them over the year it takes you to do that while you're working at another job, and there's a lot of things you have to consider. I mean, we could talk about that, making sure that you have the right to develop what you have. So it's very important that if you're working at a company, make sure you've read what you've signed for intellectual property rights so that what you just developed doesn't become owned by them. So if you're thoughtful about that and you're careful, most people, there's ways to get that done, but you have to be aware of it, of what you're doing.
Last question.
Mike, why did you choose Bain for your exit as opposed to another private equity group, as opposed to going public?
Well, the company got closer to being public. The company right now is going to break $100 million in sales, and so it's not quite as consistent in the sales to be a public offering yet. So why did we choose Bain? I mean, this could be a whole session too, but there's a lot of, as the company matured, I really like the people, number one. And they gave us an opportunity to buy some of the company, controlling the company, and let everybody still ride the next round up. We had opportunities to sell the company too. And so we chose Bain because we liked them. And it's funny, it was during the election, and so we're watching it, and Mitt Romney's not doing real well in it, and he's, as you know, is the founder of Bain. And I asked all the guys who were doing the deal, how do you feel about this? It's not going well. They said, Mike, we're all Democrat. So no matter what the news shows and TV shows show about who they are and what they are, it's different than you'd think. But they actually I chose them because they're known for honoring their commitments. They're really tough, but they're really honest and really good at what they're doing. So that's why we chose them.
Mike, thanks very much.
Okay, my pleasure. Thank you, guys.